This morning's headline: Bullion Bank nightmare as LBMA COMEX spread blows up again. What's going on? The spread's blowing out. Are we closer to running out of metal?
I don't know. From the looks of that headline, it doesn't sound good, does it?
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and it is time for Denver Dave Kranzler's weekly appearance on the show, which gets a little more exciting each week as it appears we're getting closer to some sort of break in the metals pricing. Dave, it's good to have you here today. How are you doing, my friend?
It's good to be back again, Chris. I'm doing okay. How about yourself?
Good. I was certainly fascinated to see this morning's headline: Bullion Bank nightmare as LBMA COMEX spread blows up again. Um, Obviously, we've been talking about it for weeks, months in some sense, yet each week as we log back on now, doesn't seem like anything has yet returned to normal, and we continue to see headlines like this. So I know the world is tuning in to see what Dave Kranzler is seeing in the gold market. And what's going on? The spread's blowing out. Are we closer to running out of metal?
I don't know. From the looks of that headline, it doesn't sound good, does it?
No, and I know you also watched the interview I did with Ronan, who wrote that article, Ronan Manley of Bullion Star. I believe you saw that over the weekend.
I did.
What was really surprising to me is that, having read his work for years, knowing that he's not, just throwing things out against the wall. And when I asked him how close he thought this was to blowing up and what he thought the price of gold would be by the end of the year, and he said $5,000 to $10,000, that really stood out to me again, given his access and perspective. What was your thought on that?
I mean, I wouldn't lay money on it. I'd bet against gold being at 5,000 at the end of the year, but you never know. I mean, anything could happen. I'm starting to think now that we could see $2,000 gold before the end of the summer. Sometime between now and then. The thing about what's going on with the COMEX and the CME and the LBMA, it reminds me of the quote from Shakespeare: "The lady doth protest too much, methinks." And they've been putting out way too many news reports and news releases talking about how it's not a supply problem. The problem is there's not enough 100-ounce bars in New York, and until the refineries start back up, they're going to have to substitute LBMA 400-ounce bars to satisfy delivery settlements in New York. Well, that's a bunch of BS. I mean, last time I looked, it's been a couple days. I think there was 4 or 5 million ounces of registered gold in the COMEX inventory report. So if they're saying there's not enough 100-ounce bars for delivery requirements, they're lying, or that report's fraudulent. So what's interesting is that you can now track the trading activity of this ACE contract, this accumulated certificate of exchange, which each certificate gives you a 25% interest in a 400-ounce LBMA bar that sits in a vault in London, theoretically. And I think it's been trading either since Monday or Tuesday, and there has not been one trade in the contract. So that, to me, tells you all you need to know. I think people who want physical delivery know that that's a BS derivative security that represents nothing. And if someone's going to settle for 4 of those certificates to get ownership of equity in one 400-ounce bar, I think they know they're probably never going to see that bar. So, and I looked up I was going through the PDF, the propaganda PDF that the CME and the LBMA devised, describing the whole process and how it works. And it was, essentially 18 pages of propaganda, and nowhere in there does it explain the mechanics of how you would actually personally get delivery and load out the bar off the exchange. So the last page says, contact this email address for physical delivery inquiries, which kind of tells me that, don't call us, we'll call you when we're ready to deliver the bar.
I mean, that's what stands out to me where, again, I know people want to hear it's going to go to this price on this day. And certainly I wish I knew that yet. Just as I look at it like a poker game. And when you get these announcements and see the spreads blowing out, I mean, like I think you pointed out, well, is there the smoking gun that something's about to happen? No, but certainly a lot of unusual signs. I'd like to pull back up that COMEX depository warehouse gold stocks again. I saw this earlier this week and thought it was interesting because you see quite a big spike here in the latest reading, maybe from the beginning of April. Any thoughts on why that would be?
Well, yeah, what it is that 4 or 5 million ounce spike is the allocation or alleged allocation of the 400 ounce bars over in London to COMEX approved vaults over in London. So, and I don't know exactly what that means in terms of COMEX approved vault. If, let's just say, HSBC coincidentally is the vault custodian for GLD, and they've got presumably a vault or several vaults in London that have 400 ounce pallets of 400 ounce bars on them, right? So they say, okay, we're going to move this pallet over to this part of our vault and put a sign that says JP Morgan's allocated 400 ounce bars for COMEX. Okay. Well, if people believe that that is actually happening, well, I've got a bridge in Brooklyn that connects Brooklyn and New York, the lower part of New York. I'd be happy to sell them an interest in.
Yeah.
I can write the contract right now. So that's essentially that pop in the warehouse gold stock on the COMEX is the theoretical 400 ounce inventory that's been allocated over in London for the settlement of the ACE contracts.
Yeah. And it'll be interesting. A lot of activity.
In other words, that gold is basically, when they show that on the COMEX, again, it's one of these things where they're doing everything they can to hide the smoke that's going to kill the canary in the vault. And one of that is giving the illusion that there's another 5 million ounces of gold available for COMEX deliveries. Well, A, we don't know if it's truly available, and B, that gold's never going to be delivered. So how can you even call that a delivery? You get 4 ACE certificates together, and they issue you a vault warrant for a gold bar sitting in London. And they're giving this cockamamie argument that, we can't transport it over to New York. Well, that's BS, because there's bars are being transported privately all the time right now.
Yeah. Well, it's going to be fascinating to see how it unravels. Seemingly the headlines are hitting by the day now, and whether it completely blows up or we see the controlled retreat will be fun to follow. Unfortunately, I'll mention you do dig into these things in your mining stock journal. Which did you practice this week pointing? So you got to it's in the description below, but yeah, you want to get right to the edge of the screen, but not below. So this is the kind of analysis and skill that he applies to the short sellers journal and the mining stock journal. Dave, I thank you as always for joining me today, and we'll look forward to doing this again next week.
Thanks, Chris. I'll talk to you later.